Trump's tariffs are tanking the market. They're absolutely blowing up the technical chart patterns as well. We've got a lot to get to right in the beginning. I'll talk about the one thing of all this tariff stuff that you've got to keep an eye on. It's obviously a fluid situation. Things can change by the hour, by the day. I'll tell you what I'm looking for, and we'll obviously go through all the news as we have multiple FAANG stocks absolutely getting blasted. We've got a TikTok sale delayed another 75 days. We've got multiple things to get to on today's channel. What is going on, investors? Hopefully you guys are doing well out there. Kick things off like we always do with Meta Platforms. Start of the week at 555, blasted down. I guess everybody's assuming that the small businesses just aren't going to be advertising as much because Meta Platforms down 9%, down to 504. 52-week low is 414 on this one. We're headed that way. I tell you what, with everything that's going on, I think there's one country that I obviously think that you need to look. China is playing hardball with the United States. I think Vietnam, all the other countries out there, they'll come to grips. You look at how Mexico is handling things. They were a little combative with Trump right in the beginning, but they are now playing ball, and Mexico in particular is probably playing the way that most other countries will do it because they realize, like, hey, politically, it's probably not a great thing. China's playing the long game. They're playing a little bit of hardball. If this brings the two countries to the negotiation table, you could have a snapback in this market like you've never seen, really probably since the March 2020 snapback V-shaped recovery. If these two countries, China and the United States, decide to go down the long road of battling and imposing these tariffs, leaving them in place, and just going tit for tat on this thing for any length of time, particularly several months, if not a year or more, well, the stock market is pricing that at the current moment, and the stock market will stay low for a very, very long period of time if these countries don't resolve things. So it is really the China and the United States that need to come to the table. My guess is all these other countries, they'll come to a deal. Now, speaking of a deal, we've got TikTok potentially moving closer to an okay of a deal. This was the news earlier in the week, but we got news later today that President Trump is extending the TikTok deal deadline by another 75 days. According to some people, close to the negotiation, they actually believe that the TikTok sale is, it has some tariff ramifications, that Trump is tying the negotiation as it relates to tariffs with TikTok. And so now you've got another 75 days here. Could actually extend the negotiations out with these tariffs, which, again, as it relates to China in particular, would not be good for the broader markets. And so we'll see what happens here. But we do have a somewhat of an indication of who's interested. Obviously, some people like Kevin O'Leary, Mr. Beast, others have kind of made themselves known. As we will get to Amazon, they look like they've thrown in a bid here. That's very interesting. You have Andreessen Horowitz, these private equity. Oracle is looking not to necessarily take a large stake, but a minority stake in this thing. You also have an OF, if probably is how we should say it. That founder is looking to get into those things. I tell you what, who ends up with TikTok? Who knows? But as the market stays relatively volatile, I think who no matter who ends up with it, is probably going to get a great deal. I think whoever ends up with TikTok, and that's why I was excited when I saw Amazon jumping in. I tell you what, whoever ends up with this, if somebody ends up with it, probably actually going to get it at a discount. Meta likely to release Llama 4. So as you know, the company is releasing their large language models in an open source fashion. So their Llama model is coming up on a new model. We'll get to OpenAI. It looks like they're close to releasing a new model. And this is what we're going to see over the next year, at least the next year. I probably think we're probably year and a half, 2 years, where OpenAI releases something. It's awesome. Meta releases this. It's awesome. Maybe a company from China, DeepSeek or whatever, releases an update. It's awesome. Grok releases something. Anthropic. They'll constantly be stepping forward in terms of performance and capabilities. Meta right down the pike with that. Now, Mark Zuckerberg is lobbying President Trump to escape the upcoming FTC trial. And I really disagree with this FTC trial because what they want to do is actually undo the acquisitions of WhatsApp and Instagram. I just fully disagree with this from a government perspective. If a company makes an acquisition and at the time that acquisition is approved and goes through, I just don't think you can come back years later and say, wow, Meta's done a great job integrating that acquisition, because at the time of these acquisitions, and some of you guys might not remember this, when Mark Zuckerberg bought WhatsApp, he was roasted. When they bought Instagram, people wondered if he had lost his mind, particularly with WhatsApp. The price that they paid with WhatsApp, people thought they lost their mind. And now the government wants to come back and unwind the acquisition. Makes no sense. Whether President Trump gets involved here or not, I don't care. I think the FTC is completely overstepping themselves. Now, Meta also becoming an official partner of the UFC, as Mark Zuckerberg has gotten into kind of M&A fighting and MMA training and those types of things. Looks like they are the official AI glasses of the UFC, and they're going to be integrating technology. Moving on to, I should be maybe a little more somber here, because Apple started the week at 216. And I don't know if I've ever seen this. Apple stock down 13%, not on the year, folks. In 5 days, year to date, Apple stock, a quarter of its valuation shaved off, including, like I said, 13%, as obviously those tariffs have a big impact on a company. Now, EPS is being brought in, and this is what's being priced into all the stocks. As Trump made an extraordinary move with the tariffs, and we can agree or disagree with him, doesn't matter. From an investment standpoint, it was completely extraordinary what he did, and so you have to knock off your EPS, your revenue, all those types of estimates, and that's what investors are doing, and that's impacting the valuation. The difference, I would say, with what's going on right now with the tariffs is conceivably this could be worked out over the weekend. Okay, this wasn't like the Twin Towers being destructed. You saw that as an investor and you were like, oh crap, my whole life has changed basically, right? The pandemic, also very similar thing. It wasn't going to get worked out over the weekend. The thing with these tariffs is everybody's reacting to these things like it won't get worked out over the weekend. And it's possible it does, possible it doesn't, but investors are positioning themselves like it won't. Now, Apple inched higher actually earlier in the week as foreign branded smartphones continue to climb in China as it relates to the tariffs, as it relates to just how domestic consumers in China view American brands. It all seems to be deteriorating for Apple. Because I don't think we've even seen a trough or a bottom in iPhone sales in China, and that will continue to have pressures whether you have tariffs or not. Now, Foxconn is responding a little bit, and they're looking to make 30 million iPhones in India by 2025, but that just happens to be only about 25% of the production. So Apple is not going to be able to move their phone production out of China into India, let alone here in the United States. And so will the price go up, or will suppliers bend? We'll see what happens there. There was a rumor earlier this week that's probably true that Apple wants to buy about $1 billion worth of Nvidia's latest Blackwell designs. They're probably in a long list of companies that want to do that. Moving on to Amazon. Start of the week at 185. We climbed and then we fell big time on Amazon, down over nearly 8%. Finished week at 171, just $20 higher than the 52-week low on Amazon. They submitted a bid earlier this week to buy TikTok, which would be extraordinary. If you're not familiar, if you're like an old man like me and you're not on TikTok or whatever, TikTok Shop is big time. So if I was a younger guy and I was just more into affiliate marketing and those types of things, I'd probably be really, really dialing in on TikTok. Now, it doesn't mean like an old person can't succeed. There's a lot of people my age and older really succeeding. It's just from a business maturity standpoint, I don't want to go down those roads anymore. But I tell you what, TikTok Shop, I hear a ton of people just printing money on TikTok Shop. So it'd be very interesting if Amazon, this would be a transformative acquisition for Amazon. There's not that many companies out there that Amazon can do this, and TikTok would be one of them. And I think if they're able, and if they're serious, some of the rumors with that Amazon's bid wasn't necessarily serious here, and they might just be in there trying to make other companies, like they view Oracle as a competitor, so they're trying to drive up the price that Oracle has to pay for an investment here, or maybe somebody else in the marketplace. I don't necessarily think that's true. I believe that Amazon probably views TikTok actually as a legitimate competitor, And in this weird environment where this is a forced sale and you have the president involved in China and all this types of stuff, Amazon looks at a way as a way to get into that marketplace. And I think it's brilliant on Amazon's part. Now, they're launching their Project Kuiper, which is the Starlink, I guess, as you could say, satellite internet for Amazon. What's interesting enough, I think SpaceX is actually going to be launching most of their early satellites, and Jeff Bezos' company potentially could get into that at a later date. Amazon is joining Netflix and getting NFL Christmas Day games as the NFL is realizing that traditional broadcast television, those companies don't have any money, particularly compared to Netflix and Amazon, and they are betting up those NFL rights. My guess is in a couple of years, all of the major sports will primarily be on these big tech companies' platforms. Now, Amazon plans to complete also on the major studios on the big screen. A lot of different stuff happening in the movie space. You had that Snow White movie completely flop. And so I actually think there's an opportunity here. If you have Disney just bricking on the movie side, well, MGM Studios, which is wholly owned by Amazon, maybe they can come in there because there's still a huge demand to watch good movies. I just don't think Hollywood is making them right now. Occasionally, and some of you that watch movies and consume it more, you could disagree with me, but in my opinion, they're just not making good movies in Hollywood. It has nothing to do with like woke or any of that stuff. It's just in general, the production value, the storytelling, and those types of things, it's not nearly as good in the past. When they do come out with a great story, it tends to do well, but they're just not consistently doing that. So Amazon getting into that business, probably a good thing. Now, they're also restarting drone deliveries after a software update. They're delivering Prime Air deliveries in College Station, Texas. I believe they were doing it out here in California, although it looks like they shuttered their test site in Lockford, California. Lockford, California is actually a pretty small town, and so that's potentially why they did that. But they're also delivering it in Arizona as well as drone deliveries. Probably becomes a big thing. Now, you're going to see a lot of this as it relates to AI. They're making these agents or these bots that allow you to go out on the web and click through and do stuff. Amazon launching something that will buy for you using AI agents. Here's the thing about shopping, though. Shopping is therapeutic. Do I really want the AI shopping for me? So I actually don't think there's going to be a lot of demand for AI agents, maybe from the business perspective, right? If you're trying to reorder stuff from Amazon, something like this might be kind of interesting. But I've seen apps where it's like, oh, I'll book all your flights and your vacation for you. Isn't half of the fun about the vacation is planning it? You know what I mean? I understand business travel is a completely different thing, but like, I just think shopping is therapeutic. So I think these AI agents surrounded towards it or centered around it actually aren't going to be very big businesses. Moving on to Netflix, start of the week at 907. And despite, I don't know how the tariffs really impact Netflix, but it was not immune, down 5.6%, finished the week at 855. Not a lot of news out of Netflix. Moving on to Nvidia. And speaking of moving, started the week at 104. Boom, down 10% on Nvidia, under $100. You got to see this technically. We have been on a cliff and we are literally dangling ourselves over the cliff. The 52-week low is 75. And if we dangle over that cliff next week, Nvidia we'll be doing this show next week, and Nvidia will be at 75, maybe even lower. Now, it was downgraded over at HSBC. Unlimited GPU pricing power, that's possible, okay? You just already have 75% gross margins on a lot of these products over at Nvidia. How much further can you push to the upside? Difficult to say. Obviously, AMD continues to come to the market with stuff. You've got Broadcom on the custom side. Intel has a few products in this space, not a lot. And so, I believe that the pricing power with Nvidia is going to be strong, but I do agree with HSBC that to push it up even higher, it's probably going to be relatively difficult. Now, the company touted a custom chip going inside the Nintendo Switch, which was supposed to pre-order this week, for $449 and go on sale June 5th. But news came out later that Nintendo, and this is extraordinary about the tariffs, is that Nintendo actually pulled the pre-orders down from this. And so maybe because of price, maybe because of supply chain, obviously because of the tariffs. And so we'll see. And this is where the nuance of the tariffs, after we get past this week and probably next week, where people start to really dig in here, is who gives in at this point. I'm not talking about from the country perspective or Trump versus China or whatever, but on Nintendo's side, do you still sell this at $449 and you all of a sudden eat some of the tariffs, or do you now have to sell this at $459, $559, those types of things? Does Nvidia have to do some price concessions in order to get Nintendo to sell this at this $449? Because they don't throw this price out there just willy-nilly. This is all done by very sophisticated market research, and they know that they bump the price of this Nintendo Switch up, well, somebody with an Xbox or a PlayStation just doesn't buy it. And so these tariffs really create these very, very interesting situations, and this was extraordinary. The company announced a pre-order and then pulled it right off after the tariffs. Just absolutely extraordinary. And obviously the stock market is reflecting that in its pricing. Now, Nvidia took part in a $300 million funding round for an AI video startup called Runway. So it's very interesting. Nvidia is constantly getting into kind of the venture capital business. One of the ways they're using a lot of the excess cash that they have on the balance sheet, my guess is when you look at corporate buybacks as we move into the next quarter or two, those will probably obviously accelerate as well. Look, AI video, that is, I wouldn't say that's next. As it relates to OpenAI, we saw that image generation and that type of thing, very, very hot when we get to the OpenAI segment. Tons of news as it relates to that, driving up massive usage. Wait till you get to AI video. Wait till TV shows and, full featured movies are being made by users on AI video. My guess is 5 years from now here on YouTube, darn near half the content will be AI. Might actually be rare to see a human like me actually doing content on here. Like, AI video is going to be massive. And obviously for Nvidia, it's great from an investment standpoint because you're going to need a ton of GPUs to make videos, obviously. Now, Google, very interesting story here. They said to be closing on a deal to rent Nvidia servers from CoreWeave. So CoreWeave getting the priority shipments from Nvidia as it relates to Blackwell. Those are not going to Google. They're going to CoreWeave and some other companies as well. And so Google closing on a deal to gain access to that also could potentially be some headwinds for Broadcom if Google feels that they need to use those. Now, moving on to Google. Start of the week at, what was that? 151. This one held up. I mean, the decline on Google has been a little bit more accelerated. It's down 23%. I mean, we are just headed down the mountain on this one. We are down to $145 per share on Google. Now, the king of all media, YouTube, where most of you are watching this, could be worth $550 billion, according to some analysts, at the $1.85 trillion valuation that Google sits at right now. Some believe that about a third of that valuation just happens to be on YouTube. I bet if you IPO'd YouTube not into this market, obviously, but in a hot market, one that we might have had a month or two ago, yeah, you probably could raise at a $550 billion valuation. Roblox is partnering with Google Video Ad Partnership as Google is kind of expanding their reach there. That's very interesting. I think, and we saw this also with Spotify as they're unveiling tools for different types of AI ads. Google could be seen that obviously traditional search could struggle a little bit, but they still have tremendous partnerships and tremendous relationships with advertisers that have advertised for many years, maybe decades with Google or over a decade with Google. And so now you spread that out onto a Spotify, onto a Roblox, onto these other platforms, whereas maybe traditional search ads might not be getting searched on and clicked on as much. Moving on to Microsoft. This held up very nicely this week. Started the week at 370, down to about 359. That was down about 3%. We're right on a 52-week low, and you're going to want to see Microsoft technically. It is right on the edge there. Now, it's said to pause or slow down its global data center projects, as I believe part of this has to do with OpenAI diversifying some of its compute power away from Microsoft being kind of the lead support as it relates to OpenAI. But as we'll get to the stories with that company, I think they're seeing that other companies are going to fill that void. That's probably a good thing, honestly, for Microsoft, because this spend didn't necessarily benefit them from a dollar perspective, because they were doing this to support OpenAI, who would recognize the revenue. Some of that revenue might flow back as it relates to server purchases from OpenAI. But in this case, maybe a dialing back of CapEx that was having to require for OpenAI, and maybe CapEx that can be deployed in other ways. Now, ChatGPT, I tell you what, if you're a college student here in the United States or Canada, you can get ChatGPT Plus for free. That normally costs $20 per month. I would figure out how you get access to that, because that seems like a pretty good deal. Usage at ChatGPT hit a record after those memes that were being posted all over the place. In fact, our thumbnail on last week's video was basically a meme from this, seeing record rollout. And this just goes to the point about AI that everybody needs to understand, is that in the past, only turbo, super dorky, geeky people have been using AI. People that needed a coding thing, people that needed it to write an essay. Most people don't need to write essays. Most people don't need AI, but a lot of people post memes. A lot of people want videos. A lot of people want access to AI in the future when it does stuff that is a little bit less geeky. And memes are one of those things. And boy, you're seeing an explosion there. Their revenue jumped 30% in just 3 months, as again, AI is coming to the masses. And when you introduce images, and particularly when you introduce video, it will just go more and more to the mainstream. Now, they secured $40 billion in fundraising, valuing ChatGPT at over $300 billion. They're set to release their new large language model in the coming months, as we are probably set for another wave of ChatGPT. We talked about it with Meta. You'll get another Grok update. You're just seeing the next leg forward. Moving on to Tesla. Start of the week at 246. The tariffs, at least on the automobile side, impact Tesla a little bit less, as shares kind of bounced up and down, but finished the week at 239, down 2.75%. This is after deliveries plunged, though, in Q1, amid obviously Elon Musk's backlash, but maybe a little more nuance to that. You had a Model Y changeover, as the previous model was refreshed with a new model. Deliveries in the quarter came in at 336,000. The expectations, though, were for 377,000. In China, year over year, you saw sales decline by about 11.5%. However, month over month, you did see an increase by about 30,000 units. All things being said, I actually think it's not as bad as you probably would expect. JP Morgan, though, is pointing to kind of the unprecedented brand damage happening over at Tesla, and I certainly think it's a real thing. Certainly people that are very active and very thoughtful politically are certainly more susceptible to the brand damage potentially happening over at Tesla, and so that's something to monitor going forward. But just keep in mind, the average person actually isn't very political. And so this is something that I think Tesla, while I think in the shorter term, it's certainly having an impact, in the longer term, they can figure out ways to mitigate this, I believe. One of the ways is potentially Elon Musk stepping back from the federal government. He does, the nuance of this is he has 130 days where he can work for the government, where he doesn't have to sell off the stakes in Tesla or his other businesses, which he's not going to want to do. But my understanding is that can constantly be kind of renewed up to maybe 270 days. So he can work for the government for almost a full year without having to be approved by Congress, without having to file different types of disclosures or having to divest out of any of his own companies and those types of things. This story was shot back by both Trump and by Elon Musk. My guess is he's going to stay in the government. That is probably going to create some overhang on the brand, at least in the shorter term, again, with mostly super political type of people. And if he's able to balance this and see how it goes, they could come out the other side, maybe not particularly damaged as much as maybe people realize. Moving on to the technical segment of the show. The technicals, I mean, when you start seeing we're on a daily chart with the S&P 500. You rarely see skips of candles like this. Takes an extraordinary event, a pandemic, Twin Towers being bombed, those types of things. And what Trump did this week, whether you like it or not, we can all agree that it was absolutely extraordinary. Something like this just has never happened before. And then on top of that, you were going to have China not bend at all. In fact, shoot right back. This is going to create just an absolute dire situation, at least in the shorter term in the stock market. If you were 65, 70 years old, this is a disaster, and you should have had stop losses at multiple levels along here, and you should have been out in cash. And that is what we are seeing in the stock market. There's a good portion of the assets inside of the stock market that have to react like that. Then you have a portion of the assets in the stock market where it's a bunch of losers, and it's a bunch of people that will sell at the bottom and they have bought at the top. It's just, look, just being frank, retail investors don't tend to be very intelligent. Now, if you're tuning into this show, you actually probably don't, at least based on my analytics and based on my read of the situation, you don't fit into either of those buckets. Sure, some of you are close to retirement age, and, look, this is a tough market to obviously, retire in. This is brutal. But the good news is, look, you still have relatively high interest rates and those types of things. If you're buying at the top, selling at the bottom, Warren Buffett had some quotes today where basically like, hey, maybe you shouldn't buy stocks. If you're buying at the top and selling at the bottom, or if you're even worried about this drop. I was playing golf today. I was having fun today. Like, this is not concerning at all because I was not trying to sell my stocks. Now, in terms of total value, my stock is down. It's probably like a Tesla or two at this point in terms of total value. But was I going to sell this week? Absolutely not. In fact, this was a very, very rapid move back into the market. These levels signify it. Obviously, if China and the United States continue to go at things, this thing could go down, and it could go down a lot. You could have a lot more further down to go. I think you could comfortably get into the 4,000 range of the S&P 500 if it really gets prolonged into the summer, fall time. You were coming back down into the 3,000s, a three handle on the S&P 500. The flip side to that is if the two countries come together, you would have a V shape and probably make a new higher high by next week, potentially. That's as crazy as it is in these markets. Meta breaking through technical levels. What? You just wicked right through it. Now, you leave the technical charts up, and this is the mistake some investors say. They say, oh, man, look, technicals don't work. No, technicals on Meta have worked since June of 2023, might even say October of 2023. Something has been very predictable for 2 years. When a president does something that is completely extraordinary and unpredictable, then you have these types of moves that break through here. Support with Meta should come at the previous highs, all the way down here at about, we'll call that about 400. So you still could have a pretty big move left in these stocks, and you just have to be comfortable with that. I was actively buying today, and if the stocks keep moving lower, I'll continue to actively buy. Here you are with Apple. You've gone from like literally a month ago, you were at the top of the channel, and now you're at the bottom of the channel. One thing I say constantly about the technical patterns is, look, when stocks are at the top of the channel or above the midpoint of the channel, we're not that interested in. But I always tell you guys, when you get to the bottom of the channel, you will be able to make every excuse not to buy at these levels. So you have to be willing to step in this market. Now, it doesn't mean you have to put your whole wad in at this level, but you have to buy at these levels because this is why you play the game. And I constantly say it. When you're at the bottom of the channel, most people actually won't buy because there's always an excuse. And look, it's always a very good excuse. You can look at what's going on with the tariff situation and you can make, particularly as it relates to Apple, not buy at this level, but you have to. Amazon is pulled deeper into a green buying zone. You had consolidation on this stock for really several years, and then you had kind of the breakdown of inflation and those types of things. You also had selling pressure as it relates to Jeff Bezos' ex-wife. I've read actually some good research that a lot of this selling pressure on Amazon A lot of it actually had to do with his ex-wife, selling a good portion of her shares. On top of that, it was into like a really cold market. And so you just had this, cascading effects. Amazon's right here. So clearly one of the stocks that I bought today. Netflix, not impacted as much directly from the tariffs, although there's probably some, direction here. The technical chart pattern, believe it or not, is still intact with this one. You've got the previous highs with this one. If you do break technically, back down at about 700. That's if you break out of this channel, then the previous highs all the way back here in 2021. That'll be the magnet. Back down at 700 would be very exciting. Although with Netflix, I bought that one today as well. Nvidia is on a cliff right here at like where it is at 94, 95 bucks, 90 bucks. It's a fluid thing. It's 90 to 100 or so. With semiconductors, I would give them a little more leeway as it relates to where your support levels are, where your stop losses is. Semiconductors obviously move a little bit harder to the upside and to the downside. You would not want to break through about 80 on this one. You break through 80, then you're probably coming, I hate to say it, but you might have another 50% below that with Nvidia. So believe it or not, this one, if the tariffs stay in place and you have China going back and forth, I think you got another 50% down to go with Nvidia before you find like a real technical bottom. Google has made a really nice retracement. I've got this channel in here, up here. You could erase that if you wanted to. I mean, it was a buy. I mean, I bought Google this week as well. What I do want to highlight is the purple trend is the longer term trend. And so just keep that in mind with Google. Yes, it's pulled back off its new higher high, but you're still walking your way back with Google. So with Google, you could probably come down into the 130s next week. That would be a good buying opportunity. We'll keep the longer term view in focus as it relates to Microsoft because you still have like this longer term trend with Microsoft. I mean, it depends on how you want to draw these lines in, but you've got multiple longer term trends. You are converging with Microsoft with the previous highs in 2021. Also, this area in late 2021, this level right here at 355, you want it to hold with Microsoft. I did step in and buy Microsoft today only because this is a really good level. Could it break from here? Yeah. And again, when I say I'm buying Microsoft, I'm not buying it to sell it next week. I'm not buying it to sell next year. Still, thankfully, a pretty young man. I think I'm in decent health. I'm looking 20 years down the line. So I'm not going to be worried 20 years down the line if I bought it at 352 and it went down to 238. I would just keep buying this whole leg down if that's what happens. With Tesla, nothing's really changed. You've got the purple trend, which is the long-term trend, and you are sitting in the middle of sideways consolidation with Tesla. Tesla has been consolidating between 98 and we'll call it 450. And you're basically right in the middle with that. And so this company, obviously it's wrapped up into some of the political stuff, but with the tariffs, if the tariffs stay in place for any length of time, out of all the automakers, Tesla is probably in a fantastic position. Although I think you'll have downward pressure on pricing because Ford is going to be sitting on inventory. GM is going to have inventory they need to clear. And so you could have downward pricing pressure and certainly incentives. And you're already seeing the incentives from the automakers. And so with Tesla, it might not allow them to obviously, continue to drive up pricing, which they haven't been able to do over the last year. But obviously, if you have Ford and GM in a promotional environment, then it obviously, allows consumers to have a lot more choice as it relates to prices. But you keep those tariffs in place for, any length of time. And it probably benefits Tesla because more or less they make most of their cars or all of their cars here in the United States are made here in the United States. Folks, that was the FAANG Stock Recap Show for Friday, April 4th. Watch what happens with China in the U.S. They are going toe for toe, blow for blow right now. Any softening in this, and you will have a rapid recovery in the markets. Any continued escalation here, then you're in for much lower prices. I continue to buy the dip. If you're a long-term investor, that's the type of focus that you need to have. You are not a hedge fund manager. You're not a money manager. You're not 75. You're not retiring next year. So just keep that focus. Everybody else that is trying to sell their stocks, realize this profit. If you had money in stocks for a down payment for a house, You just got taught a very, very important lesson that money in the stock market is obviously very, very risky. But for the rest of us, if you're not going to sell your stocks in the next 10 to 15, 20 years, this is a great opportunity. Say what you want about the president. He created an extraordinary event that was unpredictable and unprecedented. And so you were seeing unprecedented price action in the stock market over a very, very short period of time. And if history proves itself, extraordinary moves in short period of times in the stock market, 100% of the time, 100% of the time should be bought and should be bought aggressively. So you can imagine while I was chipping golf balls today, what I was also doing in my other hand with my cell phone. Hopefully you guys enjoyed today's video. Back next Friday. We'll be back again next Friday. See you then. Good luck with your investments.